Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of big business and find out what is really going on. Today, we're diving into First Keystone Corporation's latest report, and let's just say they've dropped some news that might make you look twice at your local community bank. Before we dive into the nitty-gritty, if you are all about understanding what is really moving the markets and what these corporate filings actually mean, make sure you hit that subscribe button. And hey, if you want to connect with other folks who love dissecting these reports, join our Discord community. The link is right there in the description below. Alright, so this filing comes to us on the 31st of October 2025. This is a current report, which means something specific happened that the company is required to tell us about, and it happened on this very date. This is basically the document that tells us they are following the rules set by the US Securities and Exchange Commission, or SEC, which keeps an eye on publicly traded companies to ensure everything is above board. First Keystone Corporation, ticker symbol FKEYS on the OTC market, has its common stock registered. This means regular folks like you and me can buy shares in the company. Now, the juicy part, the reason for this filing today, is to report on their financial results for the third quarter of 2025, the period that ended on the 30th of September. They are the parent company of First Keystone Community Bank, so we're talking about a bank's performance here. This filing incorporates by reference a press release that contains the actual earnings announcement. Think of this report as the official announcement that a more detailed press release exists, and that detailed release is the real showstopper for understanding their performance. And to wrap things up, we see the report is signed by Jack W. Jones, the President and Chief Executive Officer. This gives us confidence that the report has been reviewed and approved by the top brass. So, what does this mean for First Keystone Corporation? Well, what we have here is confirmation that they released their third quarter earnings. The real story, however, is hidden within that press release they've attached. Without that press release, we only know that they announced their numbers, but not what those numbers actually are. This is a bit like getting an invitation to a party, but not knowing the theme. However, based on the structure of these filings, we know that Item 2.02, Results of Operations and Financial Condition, is all about how the company is performing since they've stated they announced their earnings. We can infer that the press release is where the details lie. In typical Warren Buffett style, we'd want to see revenue growth, how efficiently they're managing their costs, and most importantly for a bank, how their loan portfolio is looking. Are deposits growing? Are they making smart lending decisions? What's the profitability like? Are they setting aside enough money for potential loan losses? These are the questions we'd be asking. Looking at the structure, there aren't any detailed financial tables directly within this particular 8K filing itself, other than to point to the press release. This is common when the primary purpose is to announce earnings that are also put out in a separate, more detailed press release. So while this filing confirms the event, the actual financial story is in Exhibit 99.1. Now, what can we glean even without the press release? The fact that they are filing this specific report, a Form 8, means they are informing the public about a significant event, in this case, the announcement of financial results. This is crucial for investors to make informed decisions. It signals that a snapshot of the company's health is now publicly available. For a community bank like First Keystone, earnings reports are everything. They are the scorecard that shows if they are growing their customer base, if their lending is profitable, and if they are managing their risks effectively. A strong report could mean increased investor confidence, a higher stock price, and the ability to grow the bank further. A weak report, on the other hand, could signal trouble, leading to investor concern and potentially impacting their ability to lend and grow. In the broader context of the financial industry, community banks like First Keystone often thrive by offering personalized service and deep connections within their local communities. Their success hinges on strong local economies and the trust they build with their customers. So, when we look at their earnings, we're not just looking at numbers, we're looking at the health of their local economy and their ability to navigate the competitive banking landscape, which includes larger national banks and the ever-growing digital financial services sector. Without the press release, it's hard to give a definitive analysis of their financial condition. However, we can say that on the 31st of October 2025, First Keystone Corporation made a formal disclosure of its third quarter performance. The market will be looking closely at that press release for details on their revenue, net income, earnings per share, and the overall health of their assets and liabilities. To truly understand First Keystone's direction, we'd need to see the specific figures from that press release. Are their loans performing well? What is their net interest margin looking like? How are they competing in terms of deposit rates and loan offerings? These are the critical questions that earnings reports answer. For now, we're aware of the reporting, but the story is yet to be fully told. So, what is my take on this preliminary information? It's a confirmation of transparency, which is always a good sign in the corporate world. They are fulfilling their obligation to keep shareholders informed. However, the real story, the financial narrative of their performance, is in that attached press release. Without digging into that document, any assessment of their direction, strength, weaknesses, or opportunities would be pure speculation. This particular filling is more of a placeholder, an announcement that the real financial meat is somewhere else. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.